Hello, everyone. Welcome to the market opening bell on Tuesday, May 20th. Mainland China's economic data showed mixed results, with Hong Kong stocks falling initially on Monday but narrowing losses later. The Hang Seng Index opened 188 points lower, with losses widening to 285 points to a low of 23,059. The decline later eased and the index briefly rose 57 points to a high of 23,402, closing down 12 points or less than 0.1% at 23,332, marking three consecutive trading days of declines, down 307 points or 1.3% in total. The H-share index fell 7 points to 8,460, while the Hang Seng Tech Index dropped 26 points or 0.5% to 5,255. Total market turnover was 184.7 billion Hong Kong dollars. Southbound funds net bought 8.459 billion Hong Kong dollars in Hong Kong stocks, including net purchases of China Construction Bank $861 million, China Mobile $812 million, Tracker Fund $797 million, PopMart $524 million, Alibaba $448 million, 3S Bio $401 million, Meituan $300 million, Agricultural Bank of China $251 million, SMIC $182 million, and Hua Hong Semiconductor $137 million. Net sales included Tencent Holdings $472 million and Xiaomi $319 million. Southbound funds have net sold Tencent for 10 consecutive days, totaling 13.599 billion Hong Kong dollars, while net buying China Construction Bank and China Mobile for 5 consecutive days, totaling $4.319 billion and $2.128 billion, respectively. Technical analysis, the Hang Seng Index found support near 23,000, closing at 23,333, still within the 23,200 to 23,700 range. Trading volume shrank, reflecting investor caution. Shanghai and Shenzhen markets also saw lower volumes, with the Shanghai Composite flat at 3,367 and the Shenzhen Component down 8 points to 10,171. Combined turnover was 1.0863 trillion yuan, down 31 billion yuan from the previous day. The renminbi central parity rate rose for 2 days to 7.1916 against the US dollar, up 22 pips, the highest since April 3rd. Onshore and offshore renminbi traded around 7.21. China's April industrial production rose 6.1%, beating expectations of 5.7%, but retail sales grew 5.1% below the expected 5.9%. Fixed asset investment from January to April increased 4%, missing the 4.2% forecast. The urban unemployment rate fell to 5.1%, better than the expected 5.2%. The National Bureau of Statistics noted increased external pressures but said macro policy supported stable growth in April, though uncertainties remain and the economic recovery needs further consolidation. In Hong Kong, Alibaba stock fell 3.4% to 119.2 Hong Kong dollars. Reports indicate the White House is reviewing Apple's AI partnership with Alibaba, citing concerns it could enhance Chinese firms' AI capabilities and increase Apple's legal risks in Beijing regarding censorship and data sharing. The White House and the U.S. House Committee have raised concerns with Apple's management about the partnership's terms and data sharing details. Technically, Alibaba stock filled the gap from May 2nd between 117.6 Hong Kong dollars and 118.1 dollars. If the 20-day moving average at 119.4 dollars is lost, it may test the April 23rd gap between $111.5 and $113.9. Leap Motor released its Q1 2025 earnings, reporting 87,552 vehicles sold, up 162% year-on-year. Revenue exceeded 10.02 billion yuan, up 187%, with a record high gross margin of 14.9%, driven by scale effects, cost management, and product mix optimization. Ali Health reported 2025 financial year revenue of 30.598 billion yuan, up 13.2%, with net profit of 1.432 billion yuan, up 62.2%, and adjusted net profit of 1.95 billion yuan, up 35.6%. Companies announcing results today include Trip.com, Bilibili, GDS Holdings, Huazhu Group, and Sanat Retail. Bilibili's Q1 revenue is expected to rise 23% to 7 billion yuan, with gaming revenue up 72% and advertising revenue up 22%, driving an expected net profit of 256 million yuan. CATL is set to debut today. Its grey market trading on Phillips March yesterday opened 6.5% higher at 280 Hong Kong dollars, peaking at 288.4 Hong Kong dollars and closing at $287, up 9.1% or $24 from the IPO price. Excluding fees, 100 share lot gained 2,400 Hong Kong dollars. Affected by Moody's downgrade of the U.S. sovereign credit rating, the U.S. experienced a triple sell-off in stocks, bonds, and the dollar, with bond prices, the U.S. dollar, and U.S. stocks declining. The 10-year U.S. Treasury yield peaked at 4.5624%, and the 20-year yield briefly exceeded 5%. The Dow Jones Industrial Average fell 317 points to a low of 42,337. The S&P 500 dropped 1.1% to 5,895, and the Nasdaq fell 1.4% to 18,937. However, China's Ministry of Commerce issued a statement protesting U.S. suppression of Huawei, claiming that the U.S. Department of Commerce adjustments to chip export controls severely undermined the consensus reached at the China-U.S. Geneva high-level talks. This prompted a flight to safety in bonds, pushing bond prices up and yields down, which also spurred a U.S. stock rebound. The Dow closed up 137 points or 0.3% at 42,792. The S&P 500 rose 5 points or 0.1% to 5,963, and the Nasdaq gained 4 points to 19,215. The China Golden Dragon Index, reflecting Chinese ADRs, fell 12 points or 0.2% to 7,377. Nvidia stated that the U.S. new chip ban on China was a painful blow, causing a $15 billion revenue loss, but its stock held steady, rising 0.13%. Apple shares fell as much as 3.3%, but later narrowed losses with the broader market, closing down 1.2% at $208.78. United Health rebounded sharply after hitting oversold levels, boosted by significant insider stock buybacks, including by the new CEO. Its stock surged 8.2% on Monday to $315.89, driving the Dow's gains. Several Federal Reserve officials indicated that due to economic uncertainty, policymakers are unlikely to cut interest rates before September. Our stock pick today is Zhaoke Ophthalmology, stock code 6622. Zhaoke Ophthalmology is primarily engaged in the research, development, production, and commercialization of ophthalmic drugs. It has established a comprehensive portfolio of innovative and generic drugs targeting 6 major eye diseases affecting both the front and the back of the eye. These key ophthalmic indications include dry eye disease, myopia, presbyopia, wet age-related macular degeneration (WAMD), diabetic macular edema (DME), glaucoma, and corneal epithelial defect (CED). The group has made significant progress in developing its innovative asset portfolio, with three flagship drug assets, NVK002. The group has made significant progress in developing its innovative asset portfolio, with three flagship drug assets, NVK002 for myopia, cyclosporine A ophthalmic gel for dry eye disease, and TAB014 for WAMD, advancing toward potential market approval. Additionally, two promising drug assets by Motrel PF for presbyopia and ZKY001 for CED are in clinical stages. The group's generic drug portfolio has begun generating revenue. For the year ended December 31st, 2024, the group recorded total revenue of 69.3 million yuan, a significant 268.6% increase compared to 2023. Of this, 32.6 million yuan came from drug sales, driven by an expanded sales network now covering over 1,200 hospitals and ophthalmic institutions. The remaining revenue included a 34.7 million yuan milestone payment from a licensing agreement for adapalene clindamycin hydrochloride compound gel and income from exclusive distribution rights for Brimochel PF. The group has secured commercialization approvals for several generic drugs, further enhancing brand visibility and financial stability. In September 2024, Bimatoprost Timolol eye drop Jinbei for glaucoma received market approval, followed by approvals for latanoprost eye drop, travoprost eye drop, and travoprost eye drop in December 2024, and latanoprost eye drop in March 2025. Additionally, regulatory approval for epinastin hydrochloride is expected in the near future. The global ophthalmic healthcare market shows immense growth potential. While Greater China remains the group's primary market, Zhaoke has strategically expanded into selected markets including South Korea, Malaysia, Thailand, Australia, and New Zealand. In January 2024, the group signed a distribution agreement with Guangdong Pharmaceutical (KDP) to commercialize Brimochel PF, a novel presbyopia drug, in South Korea, deepening its partnership with KDP. In March 2024, collaborations with Pharmaniaga and TRB enabled the distribution of bimatoprost eye drop Jinbei and iGene reusable eye masks in Malaysia and Thailand, respectively. In January 2025, a distribution agreement with AFT was signed to commercialize Brimochel PF in Australia and New Zealand. Recommendation buy at 2.05 Hong Kong dollars. Target price $2.25. Stop loss at $1.95. I do not hold the above stock.